It's great to have you back, especially after a week like we had. So what do you see in the charts?
Thank you very much. Glad to be back. And let's try to figure it out. So holding aside all opinion, what about if we just go to precedent, look at facts, look at data as it relates to history? So we're in a correction now of some kind. And what I have here is all corrections of 5% or greater going back to 1927. And it's important that it's 5% or greater because you go down 2 or 3, nothing matters. It's noise. Once you go down 5, you typically go down more, whether it's the risk manager calling up, stop losses kicking in, the spouse calling and screaming, we're losing money, do something. But once you're down 5, you typically go down more. And here's how much more. There have been 210 such 5% plus corrections in 1927. If you were to look at the median, it actually is down 8.24%, and it lasts about 22 sessions. If you were to look at the average or mean, which of course picks up outliers which skew, it's down 12.19, lasting 40 sessions. This correction, we've met the median and a little bit. We're down 9 from the peak to the trough, and it's been exactly 19 sessions in the making. So if it were to be just average, it's not over in terms of magnitude, it implies more, or duration. But let's look at the chart of the S&P and another way to, these corrections, again, that we've seen over the last 2 years, they've always stayed above trend. This time, we broke trend. And that is an important circumstance. And then finally, let's look at the day-to-day chart. Here's our peak. It was a Friday, as everyone knows, Alibaba, kind of ironic, biggest IPO in the history of markets. And here's our low of Wednesday. This is 9.1% from peak to trough. But here's the problem. This ricochet from 1820 low to where we close today is exactly a 33% retracement, and it leaves you right back at the kill zone. We think you fade this right here. We think it stops here because you're back to where all the dead bodies are. This is where there's overhead supply. So we've come back to where interested sellers likely emerge. We think you sell the S&P right here.
All right, back into the kill zone. That's vivid.
That doesn't sound
clear.
good.
No.
So look, here's the situation this month.
Carter, I just want to go back to you just to put a bow on this. Back into the kill zone, and what is the presumption in terms of where we would retrace to that right. Down 9% from the peak?
So back to the low, revisit the low, and then actually achieve a new intermediate low, which would put us more in line with the average correction going back to 1927. So more time and lower prices.
Okay.